think we'll go ahead and get started. So welcome to our panel discussion. I'm Josh Divin. I'm the Senior VP of Marine Business Development at ABS. I'm not Patrick Ryan. I'm glad we got the sign updated back here, but Patrick, our CTO, unfortunately his flight had to make an emergency landing, so I was able to tap in last minute. Fortunately, I've got his cheat sheet here, so I've got the questions, and I believe I'll do my best to fill his shoes. But I'll do a quick intro here, and then I'll move over. Karl, here we go. All right, perfect timing.
Just in time, huh?
Thank you. Okay, our topic today is decoding and the shifting energy landscape. So I'll do a quick intro, and then, like I said, I'll move over here, and we'll get going. So I'm pleased to be joined today by Kristian Sorensen, CEO of BWLPG, Karl Fredrik Staubo, CEO of Golar LNG, Erik Nyheim, President and CEO of Höegh EVI, and Mads Peter Zacho, CEO of Navigator Gas. Gentlemen, thank you so much for being here. So we've already heard about the backdrops to global trade, the disruptions, geopolitics, and the green agenda, and many of these elements come together in the world of gas transport. The global gas landscape is characterized by a complex interplay of demand growth, supply constraints, and geopolitical factors. Global gas demand is expected to continue growing, particularly in Asia, while supply remains tight due to limited LNG production growth and other market conditions. Geopolitical tensions and supply disruptions are also impacting the market, leading to price volatility and uncertainty. So, amidst the dynamic environment, where are we now? How will market direction shape up in the short term? What are the impacts of the shifting global influences, and what role can we expect gas to play in tomorrow's energy mix? So what I'll do is start with some general questions, and we'll go from there, and then I'll pick on you one by one with individual questions. So. Testing. All right, so let's get going. Okay. With the renewed emphasis on fossil fuels in the U.S., how will this impact the markets, and do you foresee any additional supply on stream in the near future? We'll start with you.
You know, so even before the baby drill politics in the US, we are expecting the largest wave of LNG coming to market ever. You know, up to 2030, there's another 40% of LNG coming to market. That's about 190 million tons of LNG. So we've got a high certainty that that's actually coming to market. You know, it's a vast volume. So the question is, you know, will we see additional production capacity on top of that? I think the forecast is we'll probably see another 100 million tons of LNG, bringing that to about 700. I think that will depend more on the market, the LNG prices, and how demand develops than actual politics and policies. If the LNG prices come down to, say, $7-8 per MMBTU, I'm sure that will ignite even more demand in Asia, and we will see that production coming online. So I'm pretty optimistic we'll see even more than the 40% to 2030, which will bring this to, you know, maybe 700 million tons up to 2035, 40.
Yeah, and we see the same thing at Navigator Gas. When you produce LNG, it's wet gas in North America. You get a lot of additional products. You get ethane and its derivatives. You get propane, butane, etc. And those are the ones that we live from transporting. So this boom, you could say, in natural gas production leads also to a boom in those same commodities that we are transporting. If you want to see some external corroboration of this, if you want to see others show the numbers, you can look at Enterprise, for instance, our partner at Morgan's Point, and see their CapEx program for the next couple of years, how they're debottlenecking the export side of it. So there's a very, very strong push of products coming our way over the next couple of years.
Kristian.
And we talked about natural gas, but for LPG, it's also a lot about the crude oil production in the Middle East and in the US. And the wells are actually becoming more gaseous as they mature. So we have seen a tremendous growth in LPG exports over the last 5 years, I would say. And of course, like Matt says, when we see the big terminal companies like Enterprise, Energy Transfer, Targa, and so on, planning to invest billions of dollars in the future, that's something we see as a very good sign for export levels and, of course, the shipping market going forward.
Okay, so I'd like to pick up on what Erik alluded to. So the LNG market is set to grow around 40%, but the absolute vast majority of that is US exports. Not only is that linked to international LNG prices, but it's highly linked to Henry Hub prices in the US. If you have this amount of volume being pushed up, Henry Hub is going up, not down. That would put the floor on international LNG prices, because not only are US today the largest producer of LNG, they're also by far the largest incremental producer at the highest incremental cost. So to put it into percentages, the US is today 23% of global LNG supply. And in the next 5 years, that's set to grow to 37%. I think the Europe has understood that we overemphasized on single source LNG or natural gas from Russia. We saw the consequence of that with the Russia-Ukraine situation and then the Nord Stream blow up. We're just about now, not just Europe, but the world, to change from single source Russia to a large source US. What we think the world needs to see is an increased energy diversification and thereby tap into pools that can supply natural gas or LNG cheaper than the US and be less dependent on changes to Henry Hub. Henry Hub is massively influenced by increased domestic demand for natural gas in the US, mainly driven by not drill baby drill, but other Trump policies which made in the USA. And in particular for AI, which are now competing with us to buy the same equipment to use natural gas to produce electricity on land in US outside of the grid. So what we think is happening more than anything else from Trump policies is that you push up basically natural gas prices, which in turn push up LNG prices.
And that leads me on to the next question. Maybe Karl, we'll start with you. Will there be more new markets that can soak up the additional energy supply coming on stream over the next decade?
So now you're talking about demand, yeah? So at the end of the day, I think we've seen even through COVID and this sort of massive maybe overemphasis on ESG or greenwashing and the likes, no one in the world is willing to pay a premium for green energy. Generations said, or whatever they're called, when they charge their phone, they don't care where the electricity is from, they care what they pay for electricity. So for me, this is linked to the global energy mix. At the end of the day, people will go for the cheapest source of energy. And you see that now with coal production at all-time high, coal consumption at all-time high. Even in Europe, we're building coal plants. So for me, I think it's all about the relative pricing between the different energy sources, much more than absolute pricing. So for me, I think the importance of having this push of LNG waves should make LNG relatively attractive and therefore facilitate for demand. And as Erik said, at some price points, you see the shift towards LNG, and that's what we've seen globally.
Erik?
And maybe just to continue on natural gas, all of this massive LNG, of course, needs to be imported, which is our business. And we don't think that will happen in the current giants in the sort of importation world, which is Japan and Korea. They will be relatively flat, and you can add Spain to that as well. So it will be mostly new markets that will import this LNG, except China, which will continue to be a big part of the demand, but not so interesting from an FSRU perspective. So we expect a lot of this growth to happen in South Asia and Southeast Asia. That doesn't mean there will not be growth in Europe. We still see a case for that, and also South America, but the large majority, I think, will go to Asia. I think another interesting point is that we see around the world a lot of production, local production, depleting, which means that LNG is set to surpass pipeline gas over the next, couple of years. So LNG is increasing in importance. And in a number of countries, we now see them shifting from being a net exporter to becoming net importers. You know, for example, Indonesia, Malaysia, Algeria, and also Egypt, where we recently announced a new long-term contract for an FSRU. So there is a shift happening in a number of countries, but I think you know, South Asia is where we'll see the majority of the imports, and all of those markets typically don't have land-based terminal infrastructure, and where we see FSRUs being very, very attractive assets.
Again, Navigator a little bit different because we transport the ethane, the LPG, and the ammonias, and other derivatives from the gas production. We see already a pretty diversified demand picture. I mean, we do export a lot to Asia, but let's say from Morgan's point, the ethylene export we do there, China is only about 10%, or has been that for about the past 5 years on average. So it's not like there's a big concentration in the products we are transporting. Asia is going to be a very large driver in demand over the next couple of years with the growing middle class and the demand for consumer goods. But we also see opportunities in Europe where you see rationalizations of the refinery sector and so on, where they switch from naphtha to ethane-based input. So yeah, there are a lot of opportunities, and we have a very robust, quite diversified demand picture here.
Excellent.
Yeah, and I think, I mean, I agree to your point that when you have population growth combined with a growth in prosperity, I mean, in my book, there is no doubt that you would need much more energy in the years to come. And I think for LPG, which is has two big demand sectors, one being the residential sector for heating and cooking, and the other being feedstock for the petrochemical industry. You know, we see Asia, of course, as the main driver for this market going forward. I think we will see typically countries in the Indian subcontinent using more LPG for the petchem side. Now it's more for heating and cooking. And of course, if you think 10 years ahead, I think there's no doubt that Africa will be the next market for a commodity like LPG, which is competitively priced, easy to handle and distribute in areas where you lack infrastructure. So I think definitely the need for energy is there going forward.
Interesting. So maybe shifting from demand to financing. We heard earlier about some of the struggles in financing. So I would ask all of you, is the financing raising landscape changing for your companies? If so, for the better, for the worse? Erik?
Yeah, so FSRUs, which is sort of our line in business, is really regarded more as energy infrastructure than shipping, and where we're seeing a very strong interest on the capital side. I would say both on the equity and debt side. On equity, we just changed ownership with Ignore Infrastructure Partner coming in with 50% ownership alongside the Höegh family. They bring long-term, very attractive capital. On the debt side, we have basically refinanced our whole debt structure over the last couple of years with a combination of long-term, very attractive priced debt, plus, you know, the more traditional type of debt. So that gives us a lot of flexibility to continue to grow the business, and we've seen a strong interest, you know, from banks and the financial side on all of that side. Going forward, when we start to finance hydrogen terminals and our CCS solutions, we probably have to look for a slightly different type of capital, including blended finance with EU innovation funding, etc., which sort of will bring a new aspect into a capital structure, and that's probably slightly different players that will come into play at that point.
We've seen very robust financing markets in recent weeks and months. We did a refinancing of $300 million that was just finalized here in late April. It was completed at the tightest margin ever for Navigator Gas at 170 basis points, and from 6 Nordic and European banks. So very strong demand, and nice to see a banking group that was completely cool through the let's say, dynamic times that we've experienced since the 2nd of April. We also recently tapped the bond market here in Oslo, and we saw very strong demand. So we think that the markets in general are good, and there's also competition from Asian banks. So all in all, I think a very healthy supply of capital for shipping.
I think all companies here represent a tier in the market, which is, you can call them privileged. So of course, for us, being part of the BW group, for instance, we are very privileged in the sense that we have very good access to debt from the traditional lending banks. We can tap into the equity market like we did last year when we acquired the 12 VLGCs from Avance Gas. We're not that active on the bond side. On the sale leasebacks, we also see great interest for doing business with the company in that first tier. What is interesting, though, is how the Chinese leasing market is going to develop going forward, because I think there is increasing doubt and, let's say, uncertainty how these USTR, these US port charges, will affect ships which are leased in the Chinese leasing market. So that's something where we may see a change going forward, which can open up for new opportunities, the way we see it.
I agree. So I think the key changes, if anything, is the finance market remains strong. I think there's a new, well, it's not new, but an increasingly important source of capital being the bond market. And I think within the bond market, Norwegian documented bonds can now go size. It used to be capped at 200. Now you see $1 billion deals done in this market as well. I agree that there are some debates about Mr. Trump's tolling impacts on Chinese leasing in particular. For us, that's not such big of a deal because we don't have ships that trade. We have large floating factories that are positioned the same place for 20 years. So we are like Erik there. We are more of an LNG infrastructure play and therefore have different sources of financing. But we have a lot of capital intensive assets, so financing remains key, but we're happy with the market and the development.
Mads, for you, I know MEPC 83 is such a red hot topic right now. Then we have what I call the trifecta of IMO, Fuel EU, EU ETS. It's been discussed quite a bit today. But what I'd ask is, for you, how does this impact Navigator's gas business, and what is your outlook for this?
Yeah, I see it as very important building blocks in driving the energy transition or the transition to zero or near zero fuels in shipping overall. It also means that it gives very important business opportunities for us. We transport ammonia. Today we'll have about 10 ships transporting ammonia on any given day, and it's for 25 years been an important commodity for us to transport. And this market, of course, is going to be significantly larger with the MEPC 83. We'll see that fossil fuels or heavy fuel oil will become pretty much twice as expensive if we look to 2033 or 2034. And we'll probably see that clean ammonia, blue ammonia will be competitive from pretty much 2030 onwards compared to fossil fuels if it's a fuel for shipping. So this market is going to take off now over the next couple of years, and we see the projects are starting to ramp up.
I'd open that same question up to anybody else that...
I can just echo Mats on this one, because Navigator Gas, we have also long experience in handling and shipping ammonia. We don't have any vessels at the moment, but if you go back 5 years, I think we sold the last ship which has which could carry ammonia, and we don't think this is anything to be afraid of, as long as you can solve the safety issues in the engine room and so on. So for the LPG fleet, I think ammonia is a very likely avenue to go down in the future. The other alternative, of course, is whether the CO2 capture technology can be scaled up. We have a few shipping companies, one here in Oslo as well, on the gas side, which is testing out the CO2 capture technology. But of course, there you have this disposal issue, and I think for us, ammonia and CO2 capture are the two technologies, I think, after the dual fuel technology, which we see at the moment, which can bring us down to net zero.
It'll be interesting to see the global order book now, if they're people brave enough to order ships with only heavy fuel oil propulsion. I wouldn't.
You know, when you talk about ammonia, one of the questions, and I think it was brought up earlier, of crew training with all these new fuels, and one of the things when you think about ammonia, how toxic it is. Do you think there's going to be a resistance from the crew or some of the shipboard personnel on these new fuels?
I mean, the Maersk Center for Zero Carbon Shipping, they've made a very extensive research into this and asked thousands of seafarers about their attitudes to it, and a very large majority of the seafarers have said no. I mean, they will be willing to work on ships that are ammonia propelled if the right safety safeguards are on board or implemented, and I think it's just a job that lies in front of us, and of course we'll solve that too.
I mean, the cargo has been shipped on board LPG vessels for 45 years or so, so it's nothing new in that sense.
Absolutely. Okay, Erik, the 174K LNG carrier size has become quite the global standard over the last few years. How do you see this impacting the design of both production terminals, FLNG, and the receiving terminals, FSRUs?
The size. You're asking about the size, so
Size,
term.
yes.
So I would say that the 174,000 cube size that we're seeing now is probably has become and probably will be for the foreseeable future the standard size of FSRUs. That means you can receive a full load of cargo on the vessels, and you can sort of regas. They typically have a regas capacity of 750 to 1 BCF. That's what we would call a third generation FSRU, which means you can receive basically a cargo a week. So that's sort of the capacity you need. Is there a case for larger FSRUs? We don't really see that. The Q-Max type of vessels typically are in fixed trades and call on large land-based terminals, so not really so relevant for FSRUs. What I would say is that there's probably a case for all the steamships that will come off trading over the next few years. Some of them, you know, the Moss type of vessels would probably make up excellent FSRU conversion candidates and would fit into certain markets, for example, in South America or certain parts of Asia. But that will be on a very selective basis. So probably the 174 is where we'll see, you know, it's staying for quite some time.
Karl, any input on your side?
So we're in opposite end of the value chain. So he's on the import terminal, we're on the production side, yeah. But it's kind of natural if the sort of workhorse is 174, yes, then the size of the production unit and the import unit will then also adjust accordingly. But it's all down to cost and utilization. So for an FSRU, what Erik is talking about is when you have these steamers coming offline, you can buy them very cheap and convert them, which gives a very attractive cost for an import terminal. The same is true for us on the export side. So we are just now spending $2 billion converting a 145,000 cube vessel. It doesn't matter so much because we produce whilst we offload. So even if we went larger, you still need the time it takes to offload whilst we still produce. So for us, okay, maybe you lose 1 day of offloading, but for the cost, if you can save a couple of $100 million, it's worth it. So over time, yes, we see production and import units going towards the size of the workhorse, but it's not an immediate impact.
You know, Hanwha has actually mentioned that they would like to build 174K in the U.S. I think that may be the topic of a separate panel discussion, what the challenges would be there. Maybe I'll just open it up. Do you have any insights or thoughts on this push to build in the U.S.? Open to anybody here.
Have they ever built, is it one LNG vessel which was built back 50 years ago or something?
MR tankers used to be built at 5 times the cost of Asian yards for an older design. So if you're going to have 5 times the cost, then either freight is going 5 times up or the world will continue to produce where they're cheapest. And I don't think it will be 5 times the cost.
Yeah. It's difficult to see. Of course, if you throw enough money at it, you can make it happen. But I think the US will be very careful how it spends its tax dollars. I think there may be some financing schemes and so on, but outright heavy subsidies which I think would be required for making it a big thrust. I don't see that happening. So I think it's more likely that there will be smaller vessels, naval vessels, and you could say around the fringes built, but it's not going to be competing with Korea or Japan and China on commercial shipbuilding.
And India is the next. I mean, they have plenty of people who can join the workforce too. I don't think the Americans have that luxury at the moment.
Unfortunately not, no. Karl, one more for you. There's a new export capacity coming from North America and South America. Where does it fit against the large-scale land-based projects in the Middle East?
Okay, so now I'm back to what the first question you had, which goes on global production. And if the US will increase from 23 to 30% market share of global liquefaction, what I think the world needs to see is other sources of LNG production. Now, I also said earlier on that the US has the highest marginal cost of production. The cheapest cost of LNG in the world is Qatar. So they will just continue to produce whatever volumes they can push out. Where there's price sensitivity is in the US for US volumes. Or you could do like Golar does, which is go around the world, try to find relatively cheap, stranded, associated gas, liquefy it at half the cost of capex per ton versus the US and export it. 3 weeks ago, we announced that we signed a $14 billion EBITDA backlog deal to make Argentina into a gas exporter. Argentina has the world's second largest shale gas discovery called the Vaca Muerta. This quarter, so now within Q2, we're in June, so that means within this month, we will introduce Mauritania and Senegal as LNG exporters. We have a unit about to start a 20-year contract for BP. I was there last week with presidents of both countries to inaugurate both countries as becoming LNG exporters. So I think what we are doing is playing the market, trying to find production that we can create way cheaper than US exports, where we charge a 20-year tariff and a commodity upside premium that takes care of even better economics over time.
Thank you. Erik, the FSU market has been assisted by changed demand patterns triggered by the war in the Ukraine. We're seeing regas sublets, which suggests European demand has peaked. What are the prospects?
Well, we still have a positive outlook on LNG in Europe. Just last winter, we saw storage levels for LNG come down to around 30%, which is sort of near the limit which is needed, which was a change from previous years. So that needs to be filled up. It's also an indication of demand increasing in Europe. And if all Russian gas is now halted, that will mean you need another 20 million or 20 BCM of gas imported to Europe. So we still think there's a case for growth in LNG, also because local production is depleting, for example, in Norway, which means that you need to import more. In terms of regas capacity, there was a significant increase in 2022 with the number of terminals coming in. But we still see there's several projects underway in Europe. Countries like Italy, Netherlands, Poland, etc., are still working on new projects. We are also doing our own origination project together with VTTI in Netherlands. So we still see projects coming on. That's just started permitting this year and will be on stream in 2028 probably. So there's still new regas projects coming on, and I think LNG will have to be part of the energy mix in Europe for a long time to come.
Okay, Kristian. There's a growing order book of dual fuel ammonia carriers. What will these ships do before the green and blue ammonia market emerges? And given they will compete with the LPG carriers, what will be the impact on earnings?
Yeah, I mean, I think you have the answer in your question even. I mean, if the ammonia market isn't developing as some people thought it would be some years ago especially, and this is also very much dependent on finding outlets in Asia. It's kind of the holy grail is to connect the production in the States with offtake agreements in Asia first and foremost. where you can use the bigger ships for the long haul from the US to the Far East. And if that doesn't materialize, these ships will end up in the LPG market, which we, I mean, it's not something we disregard. I mean, we are definitely preparing for that kind of scenario. So we'll see. I think what's Donald Trump's phrase? We'll see what happens. Isn't that kind of the defining phrase of our time? So I think that's the only outcome, basically.
Mads, any input from Navigator Gas?
I think if you look at the very large ammonia carriers that have or are in the order book right now, I mean, in essence, they are VLGCs. But then they've been, you've added on a relatively small investment to make it flexible so that it can potentially also be an ammonia carrier. I'm not sure all of those vessels were actually meant for immediate deployment into ammonia. I think most of the owners already knew, okay, we may probably trade LPG for some time, and then when the energy transition takes effect, then of course we'll convert. So I don't think there'll be, you could say, a whole fleet of vessels that are sitting there with no deployment as such. And then, yeah, it will gradually happen once the ammonia production projects are coming on stream. Then gradually that fleet will transfer and become large ammonia carriers. So I'm not surprised by this development. I think maybe many of us would have liked to see the energy transition happen a little bit faster and see the ramp up of ammonia production happen a little bit faster. But I think with the MEPC 83 we just talked about and other developments that it's going to happen.
So that brings me to my next question, Mads. So how long do you think it will be before we see transportation of large volumes of renewable green and blue gases?
Yeah, I think if we look at the projects that are in FEED or have taken final investment decision, that it's probably going to be about 4 or 5 years from now, around the turn of this decade, that we'll start seeing the very large volumes. There are projects that will be a little bit earlier, but I mean, Navigator we call it 1008. It's a large blue ammonia project in Texas, and we think that our production will start around 2030. 1.4 million tons per annum of capacity. It's in pre-feed now. It's going to go into feed stage relatively soon, and then we'll be expecting to take final investment decision in about 15 months or so. So it's pretty much on track, and I think there are a number of projects in the same.
Kristian, agree, disagree?
Yeah, I mean, when I'm being asked this question on investor calls or investor meetings or market presentations, I mean, I'm quite open about the fact that this market takes time to develop. I also think it's a market for the next decade, and it can be a very good market for the next decade. But I think it's premature to think that there will be, you know, massive volumes of blue or green ammonia being shipped. Again, going back to your previous question on VLGCs, for instance, because the infrastructure on shore isn't built out either. So, and right now the workhorses are the mid-size vessels or the Navigator-size vessels. So, but for the 2030s, I'm quite positive, yeah.
So how about the CO2 transportation and also hydrogen transportation sector? Will that develop over the next decade?
Yeah, we hope it'll happen also sooner. Navigator has been working on CO2 transportation for quite a few years now in preparing for it, but we haven't ordered our first ship now, and we really need to see the offtake be established. And also here, there are a few Nordic projects, and they look great, but they are relatively small, so it's not the large volumes that we were hoping to see yet. But I expect it to be coming too.
Kristian?
I think for us operating in the large gas carrier segment, it's for the foreseeable future not really something for us, because I think it will start off with smaller ships on longer contracts, very much like we also seen how the LNG market has developed with many years where you had to build up basically a market with on the basis of long-term contracts, and that's not where we compete and kind of have our edge. So I think for us, we'll sit on the fence and see how it is developing, but for the foreseeable future, it's not something for us.
Okay, I'd like to take a poll as we get closer to our closeout here. So as we talk about net zero, getting to the 2050 target, I'd like to hear each of your input on nuclear. Is it an option? Do you think it's going to be a viable solution to hit the targets?
So nuclear as a propulsion of ships or as an energy source?
For propulsion of ships.
Okay, so first, I very much believe it as an energy source, 100%. It needs to happen. If you're going to have cheap and reliable electricity over time, 100%. If it's on ships, okay, maybe, but then you need to find a way to make it cost efficient. I think for now, you only see it on nuclear submarines funded by states who obviously care about security more than cost of the ships. But if the technology allows for it, for sure. Like if it's a what do you call it? It lasts for the life of the asset. So if you can fuel once, obviously it has advantages. But now there's no way you make it cost competitive.
I think if you look at naval, I mean, submarines, aircraft carriers, you have, I mean, the Russians have also tugs and so on in the north, which are operating with nuclear engines. But, so I mean, the technology is there. And I think it seems to be pretty safe, even if you think about the thousands of sailors on board these vessels, which have been going on and off. But coming back to your point on the who's going to pay for it, I mean, basically you have to install it at the construction time of the vessel. And okay, if you don't have a charter willing to pay for it, then it looks very hard to implement it, basically.
Well, the technology is certainly there. I think even the cost will probably come down to a certain degree. But I think the big problem will be calling ports. You know, it would just require massive legislation in ports and countries around the world, which means that effectively, you know, it will be very, very difficult to implement from that perspective. So it works for, you know, dedicated trade routes or shuttles. But for a sort of global trading system, it will be, I think, very, very difficult to implement.
If you had, like, you could say the China and UK made friends again and had a container trunk route between Shanghai and LA, would it make sense here for very large container vessels that just go super high speed forth and back? Maybe, but for tramp shipping, I really don't see it. I mean, given how difficult it is for all of us to keep our vessels in great shape and so on, I think it's too risky.
You know, when I started ABS 19 years ago, I think I would have been laughed at for, you know, bringing it up. But now it's a legit conversation, and it's I think the risk appetite of maybe the younger generation is a little bit different. Than we'll see. So as we're getting close to time, as we close out, are there any closing remarks? Open up the floor.
I think in general, this space here is in quite good position for to meet the future need for energy, and I think we are all participating and contributing in a great way. Gas is a transition fuel. It's a great fuel in many ways. It's a great energy source. So I think all the companies here are pretty well positioned for the future.
Erik?
I think the last few years have proven what fantastic assets floating terminals are. I think both on the production side and import side. During the energy crisis in Europe, we at Höegh were able to deliver 3 FSRUs into Germany and be part of securing the energy for Europe. And it just proves floating assets are, you know, very fast to market, very flexible. You can move them around, and also very cost efficient. And we think the same will be true moving into new clean energy type of assets. So we're developing hydrogen terminals. We have our own ammonia to hydrogen cracker technology being developed at the test plant on the west coast of Norway right now. That will fit into floating hydrogen terminals. And we're also working with Aker BP on floating solutions for CCS. So I think what we've learned on the LNG side will be also very applicable into new types of energies and solutions.
Karl?
One of the most successful and legendary ship owners in the world commented in the newspaper this morning, in the Norwegian paper Finansavisen. Mr. John Fredriksen said that the best thing you can buy in shipping and energy today is shipping and energy stocks over assets. They're undervalued. I think Erik, unfortunately, is private, so him you can't get exposure to, maybe through bonds, but the rest of us are listed. I think it's seriously worth taking a look at it. To say one or two words about Golar. We just ordered a vessel that we are building at 5 times capex to EBITDA for a 20-year contract with significant further upside. We have an order backlog of $17 billion before commodity upside. We started the FLNG industry. It's now 12 vessels on the water with another 4 on order. If you compare that to the FPSO market, that was 2 units in 1985, and today you have 270 on the water. We intend to be the market leader, and we'll be very aggressive ordering more units this year. We're fully contracted on all the ones we have, and we'll do more. So I think that's the story for Golar, but the story for all of us is the best thing you can buy in this market today is stocks. So it's worth spending time, I hope.
Yeah, fully agree.
And we pay dividends.
And we pay dividends.
All right, well, with that, gentlemen, we're all out of time, and this has been great. Thank you so much for joining, and it's great to be here in Oslo, and looking forward to it.